Okay, everyone. Good morning. What I actually want to do now is give a couple examples that just occurred, and these were simple little trades in the for day traders. And I'm going to use the E-mini Dow and the E-mini Nasdaq charts as examples. And these were both 3-minute charts. Even though I prefer to trade on the 5-minute, sometimes when the market opens there's a lot more activity, so I can get away with the 3-minute and the chart will still be clear. Now, if we look at the Nasdaq first, this is the start of the new day, Monday the 27th. Market gap down here, and it climbed back up. And if I scroll to the right, I can see an inside bar. Now basically what's happened is the market sold off. I'm going to do my retracement. And you can see that the market climbed up. It hit this 50% sell retracement level. We have our inside bar, and we can short below this inside bar. Also, another thing that I like about this trade setup is that often when the market gaps down, it will often fill that gap, or at least fill 50% of that gap, and it did fill a significant portion of this gap. And so as we just scroll through, this is as good as it gets, everyone. I mean, all right, this is a perfect trade. Okay, and if you're wondering, well, how far could it go? You use your Fibonacci projection tool, and you simply do an ABC type of progression based on your retracement levels, and I've outlined that with a lot of examples in the actual course program. So what's happened is I scroll through, you can see we've got our levels here, right? Now, if you got multiple contracts, you can scale out at different levels. Also, I talk a lot, about the big numbers, the big round numbers. So, for instance, on the Nasdaq, the big numbers would be like 1810, 1800. Obviously, 1800 is way bigger. You can see the low of the day was 1875. So, when you go short here, you got to say, where is the biggest targets? And if you knew that there was a big target within striking distance, like 1800, you can say, you know what? I'm going to see if I can write it down. Now, of course, it's not always going to work at this textbook, but this was textbook's trade. You're talking almost 15 points on the Nasdaq, which is times $20 is $300. Not bad for, less than an hour of work. I wish trading would be dead simple if this would happen every day. The only thing that makes trading hard is that we need follow through, all right, on like a day like today. Now let's look at the 3-minute E-mini Dow. What basically happened was we had a little bit of trading pre-market here, so I'm going to put this horizontal line to give me a support level. When the market opened up, on this bar here, it sold off, and we had a couple bars close below this support line. What happened next is, notice we had an inside bar. So this is a support turns resistance setup. Now keep in mind too that this trade hit resistance at a major number, 12,300. Okay, once again, I love the big numbers for trades to originate near them. Market breaks below the inside bar, we go short. It's off to the races again. Monster trade. All right, the entry was at about 12,280. You can see it hit the big number, 12,200. This is not rocket science. That was an 80-point trade. Okay. Sometimes you just get lucky in trading. In other words, you get in and it just keeps going bar after bar after bar. So that's it. Watch out for these simple little trades. Now here's another one forming real time. We'll keep an eye on it. In other words, let me just take this line off. We had support. Now we're finding resistance at this inside bar. The only thing you have to be aware of is, we're at that big number, okay? So we could eventually find support at that 1800 basically. So you have to just watch it if you took it short. But if you took this first trade, which you should have been in, and you racked up that much of a profit, I would say, hey, call it a day. You don't want to make your first trade of the day after the market's already run. If you pocketed this profit, then you could take this for a second trade. But I'm just trying to point out these trades, how they unfold real time, not after the fact. So once again, this is an inside bar here. We go short. What you could do is a little Fibonacci retracement you could take from this swing high to that swing low, and so that you could see how far down it could go. Now I'm going to rescale this chart so that we can get an idea where this could go based on the projections. All right. So the whole idea is that if you are going to take this down, you can ride it to one of these numbers. Which one? You've got to be proactive and watch the charts. If the market is really stalling out at that level, let's say it rides down to this 100% level and it seems to be going sideways or not going anywhere, you could just get out. If it's really ripping through these levels, then you just keep riding it down, and when it starts to stall out, you can get out. The best way, of course, is to have multiple contracts. Then you don't have to be spot on in your judgment. In other words, you just kind of get out at the different points. Once again, just to wrap this up, when I see the market at a big level and it's already run down, I'm looking for support. Now, of course, it can go lower, but it's just something in the back of my mind that I have to keep a track of. And once again, we're at a major number here on the NASDAQ, also a big number, 12,200 here, so they could rally up from that point. We'll see what happens, and I hope this helps you.